أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الحمد لله والصلاة والسلام على رسول الله وعلى آله وبارك وسلم. Welcome, dear students, to the first lecture of Financial Statements Analysis. In this first lecture of our subject, we'll have a short discussion on the previous lecture, and then we will mainly discuss the definition and meaning of financial statements analysis, and at the end we'll have discussion on the importance and the purposes of financial statements analysis. So these three are going to be our today's lecture contents. Previously we had discussion on the first chapter. It was a general discussion. We discussed how the first chapter is organized and what we are going to study in this chapter. So let's have a quick review. The title of our first chapter is An Overview of Financial Statements Analysis. It means here we will have a general discussion about the financial statements analysis in this chapter. We'll introduce ourselves to what financial statements are and what analysis is and how financial analysis takes place, and what financial statement analysis is all about basically, what sources are used to analyze the financial statements analysis, or what from where we can gather information to carry out financial analysis on the financial statements. So let's have a quick review of all the topics that we are going to cover in this chapter. In this chapter we'll discuss the meaning and definition of the financial statements analysis, importance and purposes of financial statements analysis, factors of business survival, effective analysis of financial statements, sources of information for financial statements analysis, pre-awareness for financial statements analysis, methods and tools for financial statements analysis, or methods and tools used for financial statements analysis, limitations of the financial statements analysis, and users and types of financial analysis. So these are key topics that we are going to cover in this chapter. All these topics are not very wide. They are very small topics, but very key topics, very important topics. They are preliminary or fundamental topics which will pave the basis for the upcoming chapters and for entire financial statements analysis subject, and for all those contents that we are going to cover in this semester. So this chapter is of very importance, so I urge everybody to have a clear concept of all these topics so you are able to understand the upcoming chapters, and these topics will help you a lot in understanding the upcoming chapters and the entire subject of financial statements analysis. Alright, so let's get the ball rolling with the first lecture. Our first lecture in this chapter is defining financial statements analysis, its importance and purpose. So let's begin with the definition of financial statements analysis. Before we define the phrase financial statements analysis, in order to better understand the definition of this phrase, which consists three words, we have to put apart all these three words and understand the meaning of all these three words separately. Then we'll put together, and then we'll see when these words are put together, what do they mean, right? So let's put apart this phrase, financial statement analysis, and then get the meaning of each word separately for better understanding. So first we'll talk about analysis, then we will talk about the financial analysis, and then we will talk about the financial statements, and then together we'll talk about the financial statements analysis, and then later on we'll talk about the importance and purposes. So first, analysis. What is analysis? The definition of analysis, or the meaning of analysis, is a systematic examination and evaluation of data or information to find their interrelationships and understand cause and effect relationships to provide basis for problem solving and decision making. So this is a pretty lengthy definition. In order to understand this definition, we'll have to make different parts of this definition so we can easily understand. So let's begin. A systematic examination. Systematic, what does systematic mean? Systematic means anything which has a procedure, which has a standard procedure, which any process which has a standard procedure, we use word systematic for that. So analysis is a process which has a standard procedure. It's a scientific process. It's not a general process. Means that analysis is carried out with the help of a predetermined rules and regulations, predetermined standard, right? It's not like everybody comes up with its own way of examining and evaluating things. No, analysis always has a predetermined set of rules, or we can say this analysis process has a scientific method or scientific way of doing it, a systematic, a step-by-step way of doing it. So what do we do in analysis? What is done step by step or systematically or in a standard way? What is done in a standard way? In the analysis process, we systematically or step by step examine, right? Examination means verification and vouch, or closely watching something, checking something, right? And evaluation means comparing of data, comparison. So in the analysis, what is systematically examined and evaluated? In the analysis process, we systematically examine means check, evaluate means compare what? The data or information, any information given to us, or any data given to us. There is a small difference between the data and information. Data is in raw form, information is in uniform form. So every data is information for someone, right? At some end, every data is information. So that's why here I use both words, data or information. Data, once again I would like to explain. Data is all the things that we have in raw form, like information about something which is in raw form, not in order, disorder, or not arranged in arranged form. That is called data. Information is the material with us which is in arranged form, which is in organized form. So whether the things that you want to examine or evaluate, if it is in organized form, that is information. If it is in disorganized form or unorganized form, unarranged form, that is data. So it doesn't matter if you have a data or if you have information. So anyhow, when you analyze something, when you evaluate something or examine something, so that thing for you is data, but it could be information at somebody else's end. So that's why we have used both of the words. So examination and evaluation of data or information to do what? Why do we systematically examine and evaluate the information or data? Why? The purpose is to find out the interrelationships between the elements between the elements or between the factors in that information, right? And also understand the cause and effect relationship of those elements, of those factors involved in that information or data, right? So that's the purpose. And why do we want to find out the interrelationship and want to understand the cause and effect relationship of those factors and elements in that data or information? In order to provide as the basis for problem solving or decision making, because we want to solve a problem or we want to make a decision, right? So once again, I'll go through the definition and divide it into parts so you can understand. A systemic, look, analysis is a process. What type of process? A systematic process. What do we do in the systematic process? In the systematic process, we examine, means check, and evaluate, means compare, right? What data or information? Why do we compare? Why do we examine and evaluate the data or information? To find out the interrelationship between the factors or elements of that information, and understand the cause and effect relationship, right, between the elements and factors of that information, right? Why do we do this for? We want to solve a problem or we want to make a decision, right? So that is all about the meaning or definition of the analysis, right? For example, there is a problem. I'll give you a general example, right? For example, someone is not feeling well off and on. In a month he gets sick like 2 or 3 times or 4 times. Every week he is sick. So we want to analyze why, analyze the situation, why he's sick, right? So for example, every time he gets sick, he has gone to doctor, he has met the doctor has given him the medicine, and there were tests and all that. So those tests and prescription from the doctor, and that is the data or information available with us, right? Now we examine and evaluate closely the situation of this person along with the data that we have, right? So we want to find out that why this person is getting sick, and what medicine really helps him overcome this issue, means this sickness problem. And also then we will decide that this medicine is to be taken in the future, right? So what do? We study each week's prescription. We find out the relationship of the medicine that someone used, and the health that he had in that specific week. So we say first week he used specific medicine from a doctor, his health was this much okay. The second week he used the medicine of another doctor and he was this much okay. And the third week he used the medicine of another doctor and he was this much okay. Now we combine, we find out the interrelationships between the medicines and the health of the sick person, and also we find out the cause and effect relationship of the medicine and the health of this person. And then at the end we solve our problems. Problem solve is what we decide, we find out that this person has this issue specifically, and for this issue this medicine should be used. So that was a general example. Hope it helped. Now, financial analysis. What is financial analysis? The meaning or definition of the financial analysis is the process of evaluating businesses, projects, and budgets to determine their stability, solvency, liquidity, and profitability. So here we have an additional word with the analysis, which is financial analysis. above definition of analysis was a general definition, which can fit in every type of analysis. Here we have specific type of analysis, which is called financial analysis, right? So financial analysis, the word financial, you can also get the meaning from the word financial, and then analysis we have already discussed. So this type of analysis, financial analysis, the process of evaluating businesses. Why do we want to evaluate business, project or budget? Because we want to determine that business or that projects or that budget's stability, solvency and liquidity and profitability. These four, stability, solvency, liquidity and profitability, these four are called the factors of business survival, factors of a project's survival, factors of a budget survival, right? If you want to find out whether a business will survive or not, you have to find out, you have to know their stability, your the business solvency, you have to find out its liquidity and its profitability. If you want to see a project will survive or not, you have to do what? You have to find out its the stability of that project, the solvency of that project, the liquidity of that project and profitability of that project, right? So, and how can we find out the stability, solvency, liquidity and profitability of that business, that project or that budget? It's through a process, and that process is called analysis. But what type of analysis? Financial analysis, right? I'll talk about stability, solvency and liquidity later on, but let's first fit the definition of financial analysis into the first definition, the general definition of analysis, right? Above we said systematic examination and evaluation of data. Here we say the process of evaluating. Instead of data or information, what do we have here in financial analysis? We have business, we have project, we have budget. So this business, this project or this budget is our data or information, right? So we want to evaluate the information relating to financial. What type of information? The financial information, right? And what do? We find out the interrelationship of different elements of that in that financial information, and then we understand the cause and effect relationship of those elements of the financial information, and then through this we want to find out the solution to the problem and then make a decision, right? And what is that here? Here is we want to find out the stability, the solvency, liquidity and profitability. Once we found out the stability, the solvency and liquidity and profitability of our subject or our business or project and budget, then we can make effective and efficient decision, right? Whether to carry out that business, whether to apply for that project and then get that project and implement, whether to apply for those budgets and whether those budgets will be efficient or effective or feasible for us or not. So that is the decision making. Then we say yes or no, right? So stability is what? Stability is one of the characteristics of the business or project for stable growth, right? When a business or project is growing steadily and gradually, right, and it's growing time to time, we say that project is stable, right? Solvency means that what is the ability of this business to pay for its debt, means that we will find out how much loan we require to obtain in order to implement this project or business, and then do we have the ability to pay back that loan or not? If yes, that's called solvency. If the finance is available for that project, and then we can pay back that finance. This is the solvency of the business. Liquidity means that how much cash a business can generate to fulfill its daily operations, its short-term operations. Or in other words, we can say that how can we cash the business? How can the business cash us, right? Or how can we liquefy business easily, right? Means, does this business has any value? Means if we want to sell it out and we want to we don't want to continue with this business, so how much is the possibility that people are willing to buy it from us? So that is the liquidity characteristics of a business or project. Profitability, the name is clear. So here we want to find out how much profitable this business is, what percent of profit is compared to the investment, what is its rate of return. So the higher the rate of return, the better is the business, right? So these four are the factors of business survival. And in order to find out these four factors, we will have to apply or do an analysis, and that analysis is called financial analysis, right? Now the third thing we have is financial statement. What is financial statement? Financial statement is a summary report that is the formal record of financial activities and shows the financial information of an entity, right? So financial statement is basically a report. What kind of report? A financial report. This financial report is a formal document. It's a formal record of an organization, and this formal record reports or shows us the financial activities and financial information of a specific company. So each company is required to report its financial activities and financial information once a year with the help of financial statements. And financial statements are 5 or 4 that we have income statement, we have balance sheet, we have cash flow statement, we have owner's equity statement, and notes to financial statements, right? Now we have discussed all these three in order to pave the way to further go ahead and discuss the meaning and definition of the financial statements analysis. So let's talk about that. So financial statements analysis, there are 3 different definitions, and all of them are somehow they present the same picture. Let's go through them one by one. The first one says it's the process of reviewing and analyzing a company's financial statements. Reviewing and analyzing a company's financial statement is called what? Financial statements analysis, right? Reviewing and analyzing a company's financial statements or financial information is called, specifically financial statements, is called financial statement analysis. Why do we review or analyze the financial statements of a company? In order to understand the financial health, right? And to make better economic or business decisions, right? The second definition is the process of identifying financial strength, weaknesses of a firm by properly establishing relationship between the items of the balance sheet, income statement, and cash flow statement. So again, it's the same thing. It means that we have to identify, with the help of financial statements analysis, we identify the strength and weaknesses. What strength? Financial strength and financial weaknesses of a company. And how do we do that? By analyzing, by reviewing the financial statements of that company, right? And what do we do with the financial statements of that company? While we are analyzing, we establish the relationship between different items of the financial statements. For example, in income statement we have 2 main items. There are revenues and there are expenses. So we find out the relationship between, we properly establish the relationship between the revenues and expenses, relationship of one expense with other expense with other, and relationship of the revenue with each expenses, right? We properly establish the relationships, and then we reach to a decision and see, and then we came to a conclusion and find out where the exact problem lies, right? Similarly, income statement, we have three main items: assets, we have liabilities, and we have equity or capital. So we can establish relationship between various items of main items and sub items of this balance sheet, right? And the purpose is to find out the financial health, means weakness or strengths. Why do we want to find out? Because we want to make effective and efficient decisions. Third definition is financial statement analysis is the collective name, right? Collective name for the tools and techniques that are intended to provide relevant information to the decision makers. So this definition is also very good. It says financial statement analysis is not like, it's not one technique, right? This name is given to a collection of techniques. There are a lot of methods, like 6 or 7 main methods or techniques with the help of which we carry out financial statements analysis. So combinedly, all of them together, they call financial statements analysis. What are those techniques and tools? Inshallah, we will discuss those later on, right? So this was about the financial statements analysis. Now let's talk about the purposes of financial statements, right? The purposes of financial statements. So each financial statement has its own purpose. For example, the basic purpose of all financial statements is to provide the information about the results of operations, financial position, cash flows of the organization to its stakeholders for decision making. That's the main purpose of the financial statements, to provide information about the result of operation, means profit and loss, financial position, right, and also the cash flows. So these three informations are provided by the financial statements, main informations. Now each income statement has its own purpose. The income statement shows the ability of a business to generate a profit. It reveals the volumes of sales, the nature of the various types of expenses. When we review over multiple period, the income statement can also be used to analyze trends in the results of company's operations. We can also compare different years financial statement of a company. For example, we take last 5 years income statements, and then we see the trend of the company's income, right? For example, in 2000, let's start from 2015. In 2015, how much was income, and how much is it increased in 2016, and how much is it increased in 2017. And also we see whether in 2018 it was increased or decreased, and also in 19 it increased or decreased, in 20 increased or decreased. So that is how we find out the trend of a company's earnings or the income. So that's the purpose of the income statement. Next, balance sheet. The purpose of balance sheet is to inform us about our current status, right? To let us know the current status of our business, right? So we can use this information, the information from the balance sheet, to find out the liquidity, the funding, and the debt position of an entity. Means how much cash do we have on hand, right? And what is the funding? What are the sources of funding? From how many sources do we have financed ourselves? and what is our debt position, can we repay our loans or debts or not. So all this information is can be acquired from the balance sheet, and the purpose of balance sheet is to provide such information. The purpose of statement of cash flow is to show the nature of cash receipts and cash payments. Disbursements here mean cash payments, right? So since cash do not match the revenues and expenses shown in the income statement, free cash flow can be calculated with determined performance and evaluation of overall business. Knowing the flow of cash or having information about the cash is very, very important. So cash coming in and cash going out of the organization, the information about this is very, very important, and this information can be found on the statement of cash flow. Why this information about the cash is important? Because in finance we say that finance is the lifeblood of an organization and cash is the king, right? So cash is the king because all the major and main decisions are taken based on the cash position of a company. So in order to have information about the cash position, cash flow statement helps us, right? Now let's come to know the purposes of the financial statements analysis. The first is that financial statement analysis helps us to develop an ability to read, understand, and work with financial statements. With the help of financial statement analysis, we are able to read the financial statement, understand them, and then work with them. We also will be able to, the financial statement analysis helps us in the assessment of the performance of a company. If you want to assess the performance, if you want to find out the performance of a company, so financial statement analysis will help you a lot. It also helps in determining the relative strength and weaknesses of a company. It helps us in evaluating the past performance and mapping the future plans. With the help of financial statement analysis, we can find out the past performance of a company, and then plan the future of that company accordingly. It also helps in estimating the future cash flows, riskiness of the cash flows for making investment or lending and financing decisions. There are three main decisions that we do in finance. One is financing decision, second is investment decision, and the third one is working capital management decision, right? So these three decisions are very important, and in order to take these three decisions, financial statements analysis helps us a lot. It also helps us keep an eye on the performance of company to safeguard investment and take corrective actions. Time by time, if you carry out financial statements analysis, it will help us to safeguard ourselves from losing our investment or from facing the losses, and we can take corrective actions on timely manner before it's too late. And it also helps us decide whether to keep doing business with the company or leave that company, right? For example, you have invested in a company. Financial statement analysis will help you decide whether you should keep doing business with this company or you should stop doing business with this company and take out all your money, because this company is going to face losses, and this will be found out with the help of financial statements analysis. It also helps in determining the extent of credit to a business, restrict the amount of credit already extended. It helps us decide whether to take further loans or stop getting further loans, right? With the help of financial statements analysis, when we do analysis of our financial statements, we can reach to a conclusion whether we will say we don't have to take further loans because we'll go bankrupt, right? So that's why financial statements analysis. Very important. Okay. Importance of financial statements analysis. Financial statements analysis will help business owners and other interested people to analyze the data in financial statements to provide them with better information about such key factors for decision making and ultimate business survival. So that is already discussed previously, that financial statement analysis, with the help of this, we get information from the financial statements, and that information helps us with effective and efficient decision making. Financial statements analysis involves analyzing the information provided in the financial statements to provide information about the organization's past performance, present condition, and future performance. So if you want to find out what was the past performance, what was the present performance, and how is going to be the future performance of a company, you will find out that with the help of financial statements analysis. It also helps us in assessing the organization's earning in terms of power, persistence, quality, and growth. It also helps us find out the solvency of if you want to find out the earning power of a company, you will use financial statements analysis. If you want to find out how this company is persistent in earning the profit, so again you will use the financial statements analysis. If you want to find out the quality of growth of a company, right? Companies may grow, but there is something which is called quality. What is the quality of growth of a company? That is very important. So in order to find out that, we have to use financial statements analysis, and it helps us a lot. With the help of financial statement analysis, we use financial statements to gauge the financial performance of a company, to gauge the financial position of a company, and to predict the future performance of a company. So with the help of financial statement analysis, we can do various types of comparative analysis as well, right? For example, we can have intra-company analysis. Intra-company analysis is that we compare the performance of a company for different years. For example, we take 1 year as a base, and then when we compare other years with that base year. For example, we took 2015 as a base year, then we compared the performance of 2016 with 2015, again 17 with 15, 18 with 15, and 19 with 15, and 20 with 15. This is called intra-company. Within the company, the performance of a company of 1 year is compared with all the other years, or all the a few years of the performance of a company for a few years is compared with 1 year. That's called intra-company. The second type of analysis, comparative analysis, is called intercompany analysis. It means that we compare our company with the other company, with the same other company, right? With the same other company. For example, a university may compare itself with another university which provides the same faculty, which is of same size and same structure, right? Similarly, industry averages. There are industry averages available. The information is available in the market with the authorities, where they do analysis time by time on a countrywide to report what is the average growth of each industry. Now, a company can compare its growth with the average of the industry. In whatever industry a company is serving, so that industry has a specific growth average. So we can find out our own growth and then compare with the industry average to see how overall industry is moving forward and how we are moving forward. If it is too less, then we have to be worried about ourselves, and we should have taken corrective actions. And if it is okay with the average of the industry, and then we will set goals, how much we want to improve, and if it is above the industry average, it means that we are doing good, and let's keep doing good. Right, so that's all for today's lecture. Thank you so much for being with me. Inshallah, I hope that it was clear and it's easy for you to understand. If you have any questions, do not forget to come back to me with the suggestions, with the recommendations, and with the questions that you have. Thank you so much. Assalamu alaikum wa rahmatullahi wa barakatuh.